Welcome to the Crypto Report. Every Friday, myself and our co host Josh get together and we talk about what's been going on over the last week in the crypto market. And I'm not sure if any of you guys are inclined to look at any of the charts with us, but not a whole lot has happened for basically the majority of the year. Josh, last Friday we were talking about Bitcoin up and over the 200-day moving average. That's what we're staring at right here. This big, long potential continuation fractal starting back in March. And here we are, 1 week later, right back underneath, now a downward sloping 200-day moving average. What do we got here?
Yeah, I think at this point we are just in a chopping range from hell. We're going 6+ months going into October. That was highly choreographed, including myself. And yeah, once again we fell back into that range on some volatile news with Middle Eastern conflict. And so right now we're, in my opinion, the waiting game, like we have been. Unless you're scalping or intraday trading, it's really just sitting in your spot bags and waiting. We're sitting above that 60K level, and that's kind of one of the key areas we're looking at in TTI, besides the 200-day moving average and higher highs in the weeklies. So, things are looking okay now. It looks like we put in let's hope the low on a higher low on the daily. So, yeah, this has just been the market for the last 6 months.
It's happening right now in the crypto market, but it's happened in the TradFi market many times as well, that these kind of, rangy type of choppy market conditions bring out the worst in people. And I think, we're still in this primary uptrend across the global TradFi world, but the crypto world, while it does have a very highly correlated type of price action between, let's say, the NASDAQ, for example, has not been performing at the same. So at some point, you have to ask yourself, and I ask myself this, every Friday when you spit out these reports for us, is are we still technically in a primary uptrend? I mean, since March, we have now hit a series of lower highs. We've hit a series of lower lows, and we're now trading below a downward sloping 200-day moving average. We got to call a spade a spade. Could this potentially be the beginning of a bigger move to the downside? And I think, from an open standpoint, it absolutely could be, right?
Yeah, absolutely. That conversation is definitely on the table. Either that, or we're in an extended either accumulation or distribution area. I lean to the former, being accumulation. We are relatively chopping just below all time highs. And if we're looking at other cycles and the correlations to equities markets, again, I lean to the former of an accumulation phase prior to a break to all-time highs. But you're right. The 200-day moving average is starting to slope down. We've been putting in lower highs, at least on the daily and weekly, for months now. With this past Friday being the first time we put a higher high on the daily and a higher high on the weekly. So we really need the bulls to step up here at the 61K level and take and punch in a new higher high to kind of lock in that this run isn't quite over yet for the crypto bros. So
I'm there
McDonald's
for you,
application
or I'm there with you. Excuse me, by the way. So I don't think this is the beginning of a primary downtrend. I don't believe this is distribution. I do believe this is continued accumulation. But the whole point is we have to be able to look at both sides of the equation. We're not going to blindly just sit here and assume that this is going to continue to break out, because it hasn't. We have our lines in the sand above $70,000. We have a price target up near and over $100,000. I mean, conservatively $100,000 to $105,000. We think the possibility is probably a lot higher. But we're just not there yet. So line in the sand to the upside 70K. And then obviously we have, or at least I have, a hard stop on the books at a close below 50 grand. I'm looking to get out with the profit that I have. And then I'll have no problem getting back in. But I think, this has not been the best couple of quarters for the crypto market. And I think that particularly for the crypto traders out there, this is stuff that makes you go absolutely nuts. There's just not a lot of opportunity on either sides of the trade.
Yeah, I couldn't agree more. And I think an important factor of what's driving folks who trade crypto actively, uh, the worst is that in reality, most traders aren't fully allocated to Bitcoin or even just the majors, right? Typically, most traders have an allocation of a certain percentage to the majors, and the rest is in altcoins. They're looking for beta. They're looking to outreturn the market. Um, and altcoins have been, far and away devastated over the last 6 months, with some coins down 99%. So, Yeah, the space
I
has
mean, we
been a
could
little
look
bit
at that,
salty
right?
this year.
Look at the, I'll go ahead and get rid of some of this chicken scratch here, but look at the total crypto market cap. This is minus Bitcoin and minus Ethereum. So this is not a pure view of strictly altcoins, but it's a very good view on the crypto market liquidity and just how little there is wrapped up in names outside of Bitcoin and Ethereum. I mean, there's a significant lack of interest in the altcoin space right now. And as you correctly, pointed out, a lot of these coins are down 85, 90, 99%. Now, whether or not they come back up, who knows? We've been in the cycles long enough to know that most projects that start and lose their, their flavor or whatever, they never really fully come back. There's going to be new stuff that comes out, new tech that comes out, et cetera. But these, I mean, like you said, the space has been devastated and continues to get devastated. And as a matter of fact, by the way, if you look at this total 3 chart here, we haven't even gotten close to where we were in 2021 in terms of liquidity entering the altcoin space.
Yeah, I mean, if you look at the chart, it's called Others, OTHERS. It's all altcoins, excluding the majors. So anything in the top 10 is excluded. And that arguably even looks worse, right? We are well below the 200-day moving
Not
average.
great at all. Yeah, not great at all.
And so that's kind of been the story for this year. And when we were on that run up, that was a very exciting time that we were going to break the 200-day moving average, and all it's going to absorb some liquidity from an all-time high on Bitcoin. But this 6-month period has been devastating to many folks. Whether you're trading and getting chopped up, you're using leverage in these volatile days are throwing your positions out of sync, or you're just holding spot and your portfolio number is just slowly grinding down.
And that's really the hardest part. Let's flip the script really quick and let's talk about the biggest underperformer from a mega, and that's Ethereum, right? So Bitcoin obviously consolidating while the range is relatively wide, still consolidating underneath all-time highs. We'll look at Solana and BNB in a second. Ethereum is nowhere close. Got nowhere close to all-time highs on this latest pop in early 2024, back to those 2021 highs, and has underperformed all 3 other majors. What do you think about Ethereum here?
I've said this before, I'll say it again. I have Ethereum in my portfolio. I would love for it to, hit the infamous, famed GCR target of $10,000 per coin, but it looks horrible. It looks terrible. It is 30% off of the 200-day moving average on the downside. It is acting as volatile as most smaller altcoins at this point, and just kind of chugging along this 2,200-ish area support level. And I think everyone in the market agrees that if that breaks, there's going to be some panic in the streets.
Well, yeah, I mean, you look at the bearish momentum in the RSI. It's told us for the minimum for the last 3 or 4 months, stay the hell out of Ethereum. If you would have taken that bearish momentum that we've seen in the RSI, we would have missed the entirety of the summer drawdown, which would have saved people a lot of money. Also, the 200-day moving average starting to slope down in late July really gives us that indication that there's no real sense or urgency from the bull side to come in here and try to protect this drawdown whatsoever. As a matter of fact, this looks like, I'm not taking this short. I don't like shorting the crypto market because any day it could just absolutely rip your face off. But this does look like something that wants to come back and retest that 2K level. That previous stage 1 base that we built out there, that 2K range for resistance. We longed that back in October of 2023, and it ended up playing out really well for us. But since then, the trade has fizzled out. I wouldn't be surprised to see it find support at that previous resistance area. Now acting as support is at 2K. Let's extrapolate this out really quick. If we do find support and start to build a base across that 2K, would you be looking for a potential rebreak into a new uptrend off of that base? I think that's more plausible.
Yeah, I would agree with that. And, I'd echo what you just said is if you're going to do shorting, that's something you do to scalp or kind of just intraday quickly in and out. If you do believe we are in a bull market, and I think this is something that TTI speaks to in the TradFi market as well, is that it's so much more dangerous to be shorting in a bull market versus a bear because of those kind of news events, volatility, or just explosive days that can absolutely blow your position. And the goal in crypto, just like TradFi, is to stay alive, right? You want to be around for when the bull market
you're
comes.
Absolutely right. Staying alive, and it's super it's like an underrepresented type of idea for traders and investors. Well, not so much investors, but traders in particular, especially, the crypto guys, their eyes are on the $1 million portfolio with a Lamborghini in the garage and a supermodel girlfriend. They don't think about the potential risks that are coming in here. I personally don't like shorting the crypto market because, I don't want to be worried about my portfolio at 2 a.m. on a Thursday, waking up to notifications that I've been stopped out of 17 shorts because the Chinese government said that they were thinking about potentially investing in, crypto mining stuff. There's no control over that. So I don't like shorting it. I think the potential upside risk from a short perspective is very high. I'd rather be long, strong assets than shorting weak stuff in this market. And speaking of longing strong assets, we talked about this last Friday. We've talked about it basically all summer. The name to own in the megas, other than Bitcoin when it starts to re-break out above that 70K range, is Solana. For whatever reason, this is the name that has held up the best, right? We've seen support at the 120 area multiple times. It's been a relatively easy trade from 120 to 140, 120 to 150. Are we on the same page here that we expect Solana to probably outperform the rest of the megas other than potentially Bitcoin when this market does turn around?
Yeah, I think I'd agree with that. And I do think the one note, though, is, looking at the data from Velo, which looks at majors and the returns kind of on a monthly basis, similar to Coifin for TradFi. Solana also isn't really outperforming like we want to see in recent, weeks and months. It's pretty much in line with all the other majors. Of course, Ethereum's below everyone else, actually returning negative returns. But we are waiting to see that outperformance. And I think waiting to see those trades go back into Solana. One of the reasons people love it so much is because of the high liquidity. You can get in and out and move larger size on those positions. So it's definitely one of the most heavily traded coins, I'd say. And as a result, all the eyes are on it. So I do think it is going to outperform Ethereum. It's just a matter of when, not where.
I agree with that. And then the last one, which we talked about on Friday as well, get rid of some of this chicken scratch here, is BNB. For whatever reason, BNB has held up. This reminds me a lot of the BTC chart where we found a range right underneath that all-time high. We actually took the trade above the 670 area last time we were here back in early June. It didn't work for us. And so we're sitting and waiting here for BNB to either break up and over the 670 area or we don't want it. But we do believe that BNB will be a major player when the market does come back for the crypto space. And we do like, once again, right above that 650 to 670 range. And we're targeting, why not? Let's go out there, $900 to $1,000, right?
Absolutely, yeah. Yeah, I mean, last week I was talking about how I preemptively opened long on the assumption that CZ leaving jail would be a bullish unlock, half jokingly. And it appears it wasn't. It appears
Imagine
he may have started dumping as soon as he got out of jail. Who knows? But yeah, we couldn't agree more. BNB looks great. It's a strong major. It has that kind of Binance CZ narrative. So above 670 or even above, call it 640, that's something that I think TTI and myself will be looking to go long on.
The name of the game here is patience. We don't have to be the first people in these trades. It's relatively easy to assume that because the TradFi market is going up, that the crypto market has to go up. And while in previous cycles that has been true, the correlation between the crypto market and NASDAQ, which was so heavily depended upon for like the last 8 to 10 years, simply does not exist right now. Now, I don't want to go into it because it, goes beyond technical analysis. But one thing I will point out is this what you expected as the TradFi market started to diversify legally within the crypto space? I'm going to leave that as an open-ended question. Don't answer that, Josh. I want people to think about it. I have multiple ETFs that are legitimately buying Bitcoin. Tell me if maybe opening up the crypto market to TradFi Ventures was the right call. I don't know what the right answer is going to be, but I do think that plays a role in this. Josh, I have time for one trade, and then I got to hop off for a doctor appointment. Do you have one trade for us that came out of your crypto report that you are looking at for this weekend?
Yeah, a lot of the trades from last week are obviously kind of put on hold until levels can be reclaimed, and a lot of alts have been decimated in this drawdown from Bitcoin over the last, call it 3.5 days. Currently watching a trade on Aptos, APT, available to trade on Coinbase, newer coin from 2023. It has essentially had its own full bull, full bear market cycle, and kind of leaving this from what I'm looking at, stage one accumulation zone and breaking above the 200-day moving average. So as a result, I'm looking at this and seeing, where and how to get long, essentially above, call it 960, 965, and take this up to the previous multi-year high at $18.
This looks exactly like the same chart that we used back in the TradFi market for Uber. I mean, Airbnb was a successful trade using this. Essentially, CrowdStrike is another one that I can think of off the top of my head. Essentially, we're just taking the range and we're cutting it in half. As long as there's not a significant amount of overhead supply that would potentially impede the breakout, slow down the momentum, which there's not. You can see that using a VRVP indicator, a majority of the volume is underneath the 10 area. So assuming that you can clear that 10 area, there's very little volume that would suggest there's a lot of potential bag holders looking to close at break even. And this is the same setup we used with Uber last year. This is the same setup we used with CrowdStrike last year, Airbnb last year, and those were some of the biggest trades we took last year, and they've continued to do pretty well this year. This reminds me exactly like that. So yeah, I don't mind this. Above 965, that's your trigger, $10. You get up and over this accumulation, and I think you're absolutely right. There is an incredible amount of accumulation here. A little stage 1 and 2, a little stage 2 action. Your price targets previous cycle highs in between 18.5 and 20. The Fibonacci extension tells you that that's absolutely right as well. So why not? I mean, there's very few opportunities in the crypto space right now that look good. This is one of those charts at the very minimum. If you're building a bull case, you got an opportunity to buy a breakout in an accommodative tape, right? You have a bullish momentum regime that potentially is starting within the RSI. Minimum, you're trading north of a 200-day moving average. And once again, very little volume that might suggest supply up here as you start to break out. So you said this was a Coinbase trade as well? It is.
Absolutely, yeah. Yeah, no, I couldn't agree more. The only kind of overhead supply would be investor unlocks that occur. I'm not sure the exact scheduling investing for that, but something to factor in so you're not getting dumped on by the team. But yeah, I mean, a lot of coins look like this. I think one aspect of swing trading that I've been looking at over the last couple months is that, multi-day or multi-week swing trading just isn't working right now. You really have to be looking to, take a trade. If it works, ride it for a few days and aggressively move your stops up, because any volatility or massive pullbacks, when I say massive, I mean 5%, so not massive, but pullbacks in Bitcoin are really decimating these charts. So just keep an eye on what Bitcoin's doing if you're taking these trades. And, if you see some Bitcoin or weakness in the majors, be sure to move those stops up so you're protecting your capital.
It all comes down to liquidity charts. You use ticker OTHERS. We're using ticker TOTAL. What we're looking at, though, is just market liquidity, market liquidity, market liquidity. In an environment where liquidity is actively leaving the space, the volatility is going to pick up, right? So you see a 3 to 5% move in Bitcoin. You're not going to get a directly proportional move in altcoins. You're going to get an exasperated move. You're going to get a 15 to 25% move in altcoins. And it's just a product of liquidity not being there to prop up the bids, right? So Josh, I appreciate you. Thank you so much for stopping by. To those of you that are trading crypto full-time, it's been a hell of a year. It's not easy. I suggest maybe flipping over to the TradFi market, where we have had legitimately the best year we've ever had as a community. And if you're a part of TTI, please go back and watch that October market review session we had last night. We went through 80 charts. And I'm going to tell you something. If you're not prepared for the end of the year, you're missing out, because we found some absolutely incredible trades and we're ready to smash it. Josh, I appreciate you. Thank you so much for showing up. You have any parting words for anybody?
Stay in the game. You got to stay in the game if you want to play. So as much fun as it is to leverage Sage in 100x, you got to stay in the game. You can't get wiped out, especially before the fireworks really start going off.
Truer words have never been spoken. Josh, I appreciate you. For those of you tuning in, thank you so much for giving me your time on a